Ladies and gentlemen, welcome back to the channel and welcome back to another crazy week that will be coming for markets. We have massive catalyst if you look at earnings, if you look at economic data, and really what all of this means for treasury yields. Treasury yields have been a main drag on everything, on Tesla, on small caps. Name the sector, it's being dragged down because of 10-year treasury yields. Now, the data this week will really solidify whether or not we have a problem, whether we should be concerned, or maybe it really is time to be buying the dip as much as possible. Here in this video, I will go over all of this with you. I will also share my opinions and expectations with the markets, generally speaking, and with Tesla stock. I will give you the upside scenario. If things go right, Tesla could rally to this price, or if things go really bad, the levels to be watching for on the downside. Ladies and gentlemen, welcome back to the channel. I hope you're ready. Hit the like button and subscribe to the channel if you have not done so already. And let's get started. So let's start with the outlook for earnings. We are officially starting Q4 earnings season this week. You start off with your major banks every single time, but we also have some other sectors that will be reporting, like KB Homes, Monday and after hours. Tuesday and after hours, you have Applied Blockchain or Applied Digital. It's Applied Digital, but the technical name is Applied Blockchain. Wednesday, pre-market, you have JP Morgan, Citi, BlackRock, Wells Fargo, and Goldman Sachs, as well as BNY. Like, just shove all of your major banks in there, and basically, big banks earnings season is Wednesday pre-market and Thursday pre-market. In Thursday pre-market trading hours, you will get Bank of America, Morgan Stanley, US Bank Corp, PNC, First Horizon, M&T, as well as TSMC. Now, TSMC, this one's interesting because we had Foxconn that reported earnings way better than expected. It would be a real shocker if TSMC had bad earnings for whatever reason. That seems highly unlikely to me. It may already be priced into markets that AI is doing fine. It doesn't feel like that. It feels like the world's kind of falling. If you look at many stocks and sectors out there, it looks like we're one bad data report away from a full-on crisis in markets. But TSMC could, I think, reiterate some of the bull thesis around AI, specifically AI demand. They report Thursday pre-market. The first mega cap name that will report, the first, almost $1 trillion company that will report. Now, Friday pre-market, you have SLB, Regions, Fastenal, Truist, State Street, Citizens, and Independent Bank. Now, I'm just going to kind of give it to you straight on this one. I don't think we have anything to worry about with earnings season. I'm just going to put that out there. We really haven't had a downside surprise to earnings season in a long time. I don't think that is going to be the Q4 quarter. If anything, it could be Q1 or maybe even Q2 of 2025 when earnings surprise to the downside. Expectations are not that high given the recent drop in a lot of stocks as well. I think expectations are pretty low here, and we could surprise the upside. And well, banks is only, a small fraction of our markets, but TSMC could move the big tech names, the non-big tech names, more of your AI stocks in and of itself. So this week could be a little important for earnings, but it's really the following week after that when we will get Tesla, Netflix, right? Some of your other more important names. Big story of this week, what is going to make or break our markets is one specific catalyst. Now, I will share all of them with you, but your one big catalyst will be on Wednesday. Starting off on Monday, though, we have consumer inflation expectations. On Friday, consumer inflation expectations via the University of Michigan's Consumer Sentiment Report skyrocketed. 5-year inflation expectations went up the most they have went up in a single, month on a month-over-month basis since 2008. Like, yeah, the whole Trump tariffs will cause inflation thing, is kind of getting embedded in people's expectations. We want to see that come down. We want to see inflation expectations come in at 3%. Last month we were at 3%. Expectations are for 3.1%. So is it the end of the world if inflation expectations go up a little bit? No. If they skyrocket, yeah, people are not going to like that. By people, I mean investors on Wall Street. Tuesday, we will get PPI month over month for December, expecting 0.3% month over month. Last month was 0.4%, so a slight deceleration. Core PPI month over month is expected at 0.2%. Last month was also 0.2%. So not really expecting much of an inflation problem with your PPI. Now, PPI versus CPI, what's the difference? CPI is consumer price index or consumer price inflation. PPI, producer price index or producer price inflation. So companies, how much are their costs going up? If company costs go up, they tend to pass that on to consumers. That is why PPI could be somewhat important before we get the CPI report that comes out on Wednesday. Now, at the same time we get that PPI report, we get a speech from Fed Schmidt at 10 o'clock in the morning and the TIPP Economic Optimism Index. You are expecting optimism to go up a little bit from 54 last month up to 55.1. You will also get a speech from Fed Williams. A lot of people believe Fed Williams is trying to take over Jerome Powell's position in the next 18 months, and he's kind of flipped recently to be a bit of a dove, so watch for that to continue. On Wednesday, CPI. Now, what's interesting about this is you're actually expecting a deceleration of core CPI, which sounds crazy versus what you're hearing out there from big money. You're hearing out there that tariffs are going to be this big inflationary problem, and we're not expecting that, at least for the month of December. Now, again, tariffs are not in effect yet, so that kind of makes some sense. So a CPI report that's really even in line with market's expectations currently would be good. If we surprise to the downside, that would be the best possible scenario of this upcoming week. It would skyrocket the markets if that happens. Now, again, core month over month is expected at 0.3%. 0.2%. That's the expectation. Last month you were at 0.3%. But as I say every time we get CPI, it's not just an even number. It comes in at an actual decimal point. So we could have, let's say, 0.21%. That would be a really low 0.2. Or we could have a 0.24. That would be a high 0.2. And, vice versa with 0.3. You could have a low 0.3 of like 0.25, where it just gets rounded up barely, or you could have a high 0.3. A high 0.3 would be a problem, like 0.34. Yeah, Wall Street probably wouldn't like that too much. Okay, so that's what to be watching for coming Wednesday. Month over month on the headline is expected at 0.3%, unchanged from last month, and year over year CPI is expected to actually rise a little bit from 2.7% to 2.8%. But that big important number is obviously that core month over month. If that surprises to the downside, which I think there's a good chance that it will, we're going to have a very strong second half of next week. And considering how weak markets have been, I wouldn't be surprised in the slightest bit if that is what we get. Now, New York Empire State Manufacturing Index as well will be coming out, expecting that's going to be negative and worse off than last month. Fed Barkin and Fed Kashkari will be speaking at about 9 o'clock in the morning, 9:30 or so on Wednesday after the CPI report comes out. And then Fed Williams will speak at 11 o'clock. Fed Goolsbee will speak at noon, and you do get the Fed Beige Book that will be coming out at 2 p.m. on Wednesday also. So Wednesday's CPI, Fed speakers, Beige Book, a bunch of stuff will be happening on Wednesday. And if there's really one day to pay attention to, it's definitely Wednesday. Now, Thursday's retail sales report will also be important. This is for the month of December. So far, what we've heard from credit card issuers like MasterCard and Visa, numbers for the holiday shopping season look pretty good. We'll see if that gets reflected in the retail sales. We're actually expecting a deceleration from last month's 0.7% down to 0.5%. Still very strong, but nonetheless a deceleration. Export prices month over month and import prices will also affect your GDP estimates. So that is something to be watching for. Initial jobless claims are expected at 210,000, up from last week's number of 201,000. Philadelphia Fed Manufacturing Index also expected to come in negative at negative 8.5 versus last month at negative 16.4. So that would actually be a little bit of an improvement. You will get the Philly Fed data, CapEx index, employment, new orders, and prices paid, with the prices paid component, the inflationary component, being the most important. Business inventories and the NAHB housing market index also comes out at 10 o'clock in the morning on Thursday. Fed balance sheet and a couple other smaller data points will be coming out. Retail sales, industrial production, and GDP growth rate will be coming out for China Thursday, around 9 o'clock in the afternoon or evening. And I don't expect that's going to move our markets too much, but it always has the possibility to move our markets. On Friday, building permits, preliminary data for December will be coming out, and housing starts will be coming out. For whatever reason, people kind of correlate building permits to actual building of homes, and kind of something to watch for in the inflation picture, right? I understand more homes, more supply, stable demand would mean lower prices, right? It doesn't seem to be that important to the actual inflation numbers, though. So I don't think that's going to move the markets too much, but something to watch out for. Now, specifically, this week is massive. Okay, I think we're going to have a fair bit of fear, uncertainty, and doubt, FUD, if you will, heading into the inauguration no matter what. Okay, there's going to be this black cloud over markets of what Trump is going to do and what his day one policies are going to be. Mass deportations and massive tariffs have kind of grown accustomed to hearing recently. Now, I don't think it's going to be nearly as bad as people expect, but that's kind of the narrative. I think we will see a buy the news event after January 20th. That is the first big catalyst where I can see decisively being positive. Unless on day one, Trump comes out with like a 30%, Mexico, Canada, and China tariff, then yeah, markets are going to crash, right? Under that scenario. I don't see that happening because I don't think Trump can get away with that without a crash. And I don't think Trump wants a crash. I think the last thing he wants is to be showed up by Biden's bull market, right? Trump wants a better bull market than Biden. Now, whether he can do that or not, I think largely just comes down to, how bad he wants tariffs, how bad he wants to push destructive policies on the economy. So I'm optimistic there. Okay, and I do think after January 20th, the markets are going to realize maybe we got way too bearish way too fast, and we shouldn't be as bearish as we are. That's January 20th, though. For this upcoming week, I do think we will either come in line with expectations for CPI or surprise to the downside. I just don't see the inflation problem in the economy anymore. Yes, I know you say that to a random person out on the street, they're going to say, what are you talking about? My burrito I used to get for $5 is now $12. We have an inflation problem. No, we had an inflation problem. But is that burrito really going up too much more at this point? Not really. I know from personal experience, when you raise prices on products, especially, things people are used to getting, like a burrito. That burrito doesn't sound as good at $12 as it did at $5. Even to raise the price another $1, right? Take it to $13. People start to revolt against that. And I don't think you can really continue to do that at this point. I think that era, my friends, is over with. So longer term, I don't have concerns about inflation. Markets are going to have that concern for a while until we hear again about Trump's tariff policies that he wants to enact or will enact. He doesn't need anyone's approval to dish out tariffs. That's the perks of being the president. But I think this week's CPI report's probably going to surprise to the downside. Given how weak markets are, a surprise to the downside will be very bullish. But even meeting expectations, considering we are already expecting a deceleration month over month from 0.3% on core to 0.2% will be enough, I believe, to continue to kind of form a bottom and to start the process of a rally for markets. At least, I mean, that's what I can see. Now, obviously, I could be wrong there. Maybe inflation's going to skyrocket. I mean, we've seen crazier things over the past couple of years together, so don't quote me on that. I could definitely be wrong, but I would take the under versus the over at this point. Now, specifically for Tesla stock, Tesla did much better than the broader markets on Friday. You held up support at the trend line, ultimately to close out the day. That's a good sign. Tesla actually went positive almost 1% on Friday. Tesla is like a spring. It wants to move higher. It's just really having a difficult time with treasury yields as high as they are, continuing to go higher, and this underlying selling pressure in markets. Tesla was up though 1% on Friday. I don't know how many of you guys caught that, but Tesla did do well for a chunk of the day on Friday. Now, it came down and Tesla hit this low at about 377 and then bounced up to close near the high of the day. Okay, this is what you call a hammer candlestick. When you get these hammer candlesticks, they usually lead to more upside. Right here, this looks like a hammer. Okay, this was on November 6th. What happened? The next day later, you were up 3%. The day after that, you were up 8%. The day after that, you were up 9%. And then you had a cool down period or whatnot. But usually when you get candles like that, it means the sellers took over. They sold the stock down. They got exhausted. They could not keep the price down. Buyers stepped in and bid the stock up near the high of the day to close out the day. So sellers took over. They lost control. Buyers took over and held control into the end of the day. That's essentially what a hammer candlestick pattern is, with a lot of price action, right? Where you get this big wick on the downside and small wick on the upside. That is a hammer candlestick. That is incredibly bullish. Now, obviously, again, it depends how the data comes out for this week, but assuming CPI comes in lower than expectations, you could easily see Tesla back into the 400s this week. The first big level you'd watch for on the upside is about 425. The level on the downside beyond this trend line here at about 388 would be this 50-day moving average at 365. If you didn't hold support there, then we have a major problem. Then Tesla's going to fall back to about $300 per share, really with key support that could come in at about 310. So you're either looking at 365 or 310. I mean, like $80 a downside at this point. Is that the end of the world? Absolutely not. If you're a savvy investor, you'll look at that as a buying opportunity, but not everyone will. So if I were to put my money on it, we're coming back up to retest that 425 level, this 20-day moving average, some point this week. That would be my expectation, but hey, I've been wrong before, and I could be wrong again. Now, on Friday, you had option activity that was a majority positive in Tesla. You had 118 different trades totaling $92.63 million with a positive order value of 67%. 67%'s not, like drop everything and go run out and buy the stock because nobody's bearish, right? Everyone's bullish. They're expecting the stock's going to go higher. It's not that good, but it's definitely not bearish. This means out of $100, $67 went into calls, right? Buying calls or even selling puts could be attributed to a positive order value. And 33% went into, or $33, 33%, $33 went into buying puts or selling calls. Bearish price action. So that's pretty good. I'll take that. 67% versus 33%. That looks pretty good, especially on a Friday when people tend to actually deposition, not reposition. Fridays are usually not when people get into new options trades because theta applies on weekends as well. So when your theta decay, right, it also happens on Saturday and Sunday. So you actually lose 2 days worth of time premium if you buy on Friday and hold over the weekend. So it's just not what a lot of Wall Street does. So that's a pretty good sign. Now, if we take a look at this Friday's expiration, we take a look at some of the activity here. Around the 400 call, we're going to see the most activity, around 32,000 for volume on Friday. That's the one you really want to be watching the most, because we break above 400, this thing could run. If we get rejected at 400, that could suck until Wednesday. Or really, PPI could be a turning point as well for markets on Tuesday. The 405 call had 37,000 for volume on Friday, and the 410 call had 23,000 for volume on Friday. The 440 call also had a lot of volume as well, about 44,000. So this is expiring by this upcoming Friday. Looks like option buyers potentially are positioning for a run up into 440 again. So I am fairly optimistic heading into this week. Is it a certainty we're going to have a good week? No. But again, when markets are as bearish as they are, 2% of stocks currently in an active decline, 72% of stocks below their 50-day moving average, CNN Fear and Greed Index at 27, AI Investor Sentiment Survey that has more bears than bulls right now. It doesn't take a whole lot of good news to cause the markets to rip higher. You're that negative right now, believe it or not. Now, if CPI comes in bad, again, we talked about the levels to expect on Tesla. 365 is first stop. Next stop is 310. Below that, 300 would be an important psychological level. But, under that, you're looking at maybe 370 or 274 as support, down to like 245. Markets are going to be in a really rough place, though, if we get back to there. And hopefully we all made some money on our hedges, if that's the case. Now, even for the broader markets, if this week is bad, then we're going to be approaching that 200-day moving average at about 552 or so. That would be the level to be watching for. And by then, you're going to be in a 10% correction damn near in the S&P, and you'd probably want to buy that as well. On Friday, you bounced at the 100-day moving average, specifically 6 pennies, 6 cents above the 100-day moving average you bounced. So virtually to the penny, you bounce at this 100-day moving average. If that holds support, that's a good sign. Could definitely retest back up to the 600 level if this is a good week. If not, certainly to that 50-day moving average, about 592. So let me know what you think about this information down below in the comment section. And what do you think about our major catalysts this week? CPI, PPI, retail sales. What do you think is most important for markets right now? And are you optimistic? Are you bearish? Let me know how you feel out there heading into this week. Have a fantastic rest of your day, ladies and gentlemen, and I will see you in the next one.